Hi, today is July 27th, 2023. Today we're going to be talking about Japan. You've been hiding under a rock if you hadn't heard months ago about Warren Buffett adding to his positions there. We've obviously been in there for years, but you have to take a nuanced position saying not only some of the fundamental things going on are good, but what's happening with yield curve control, what's happening with global growth, what kind of positions are you building so it's not across the board win. It has been of late, but we don't think that'll be it going forward. But what are the things that we like about Japan? First, it has a countercyclical macro backdrop. So what does that mean? So basically, they can do well and independently, regardless of what's going on with GDP growth. And what's happened before, because of yield curve control, is the yen's been pressured. That has helped some of the securities there. And one of the concerns is, gosh, if they don't keep interest rates low and they get to go up, what kind of businesses and stocks should outperform? Which ones might get hurt? Because earnings most likely will go down a few hundred basis points, but the yen will pop. So if you translate back, that into performance and then back to USD, what do we think is going to happen? And we really think you have to look at a few other things as well. And that is ROEs have been improving. Earnings momentum has been improving, and there's a lot of companies that should benefit as yield curve control at least dampens, if not goes away. We in particular like financials. We have tech there, some industrials that play into EVs and other cyclical type industries, which you would say, gosh, going into potential downturn, do you still like them? Yes, we do. So we're not going to give all of our individual names. You can probably find that on our filings. But I am going to give you an ETF. That's the EWJ, and just let you know where it sits today. So let's head over to the Longbow dashboard. And what I'm showing today is that it's overbought. So you might be hearing things in the news and you get really excited about what's happening in Japan, but definitely look at the trading signals and make sure that not everybody has an ADR. So if you have to buy shares here in the US, an ETF or a mutual fund is probably better for you. But if you can do local shares, then definitely sift those to find what you think will be doing better with higher rates there to battle what now is actually a little bit of inflation. So that's pretty good. But it's overbought. If we look at the technical signals and look at the range here, obviously it's been on a tear. Can it continue? We think yes. Bullish short term, bullish medium term, but it's at the high end of the range. Beta about 0.85, so a little bit less volatile relative to the correlated relative to the US S&P. Only 3.43% short, so it's not really consensus long or short. Implied volatility discount. So you really want to wait till this heads back to the low end of the trading range, so closer to 62 is what we're seeing today, but you have to check back throughout the day and each day to see where the trading range signal is. And that's really why you're getting a neutral signal. You've got some mixed messages here of trends and positioning. But what we'd like to see is if you are looking to go into Japan, you need to use an ETF. And we do like the EWJ so that it goes down to the low end of the trading range. So that's advice for today. See you back tomorrow.